Hey, welcome back to Two Super Guys Trade Stocks. I'm Dylan.
And I'm Vinny. And today we're talking about Alibaba stock, something near and dear to my heart. A little bit of confirmation bias for a resolve of those Alibaba bag holders, check it out. But we're going to talk about the news that's been pertinent to Alibaba stock, why the stock was down so goddamn much this week. All right, get to it.
Two Stupid Guys Trade Stocks.
So we did a separate video about Alibaba earnings when those got reported like less than 2 weeks ago, basically, and they were solid. All right,
Very
why
good.
the hell is the company now bleeding out, down like 12% from the high it reached after earnings, which is just wild.
Yeah, the graph has just been a pretty steady rainfall. So
Yeah. Our main man Charlie Munger still holds it. Burry sold and closed out his entire position. We did a video about Burry's portfolio update. You can kind of check that out if you want. But just in the last 5 days alone, down 6.5%. And like, what has changed for Alibaba's business in the last week? Really? Anything?
absolutely nothing. I'm going to go with, and I did not do the research on this, but it's probably China. Something with China.
Yes, it is indeed related to China macroeconomics that this entire story is kind of revolving around here. We've had kind of a Chinese GDP revision is coming out, or everyone's revising downward. China's struggling from a kind of an economic growth standpoint. It's not terribly surprising, honestly. I don't know who thought this was going to be blowing off the doors, but you can't grow at 10% forever. They've been in a slow downward trend in terms of the growth trajectory over the last couple of decades. We're going to take a quick peek at that, but you're seeing this continued kind of downward revision of their growth rates, and there's some other funny Chinese Communist Party things going on, which is always an entertaining thing. I always find it funny.
I don't.
Don't forget this.
Quick question. I don't know this number, but 5% sounds incredibly high for 1 year. That's ridiculous, right?
Yeah, it's still solid growth when you're talking about a country, right? Don't forget this is the kind of trajectory this graph has been on.
Yeah.
So yeah, it's slowing down, but it's still growing.
Okay, that's ridiculous.
Yeah, and they have tons of issues. We're actually going to do a separate video here about Japan, which is kind of interesting. But they have tons of issues, but it's still growing. Growing faster than the U.S. So this is actually a graph here of the Chinese GDP growth rate over time. When they first started tracking it, you're talking about mid-teens growth, just sexy numbers. But you can't maintain that forever.
No.
We've seen even the major tech companies have had to slow down from that. Yeah, some of them can still pull off quarters where they're in double-digit percentage, but that's less and less common as time goes on. We even had Apple now with 3 quarters in a row of negative growth. So Chinese GDP has been in a slow downward trend in terms of growth-wise. The rates are decelerating. Who's surprised by that?
Yeah, I'm not. I'm actually still surprised that they're positive after COVID and everything. This seems like an overreaction.
They did have a dip down to like 2.2%, I want to say, during their COVID lockdowns. But they've come back up. Now they're expecting 4.5%. The other kind of interesting thing that this came up this week too, that was taken as a major negative news factor for the Chinese economy. Chinese youth, their unemployment rate hit 21.3%. Now, this doesn't have a month on this particular chart here, okay? But the Chinese did something that is pretty epic. It's pretty epically Chinese.
Okay.
So the youth unemployment hit a record level, and they just said, "Whoa, bro, we're not going to report it anymore."
Okay. Yep. That's
Yeah.
I mean, that's communism. So
Well, this reminds me, of the old adage of medicine that if you don't check a temperature, you can't find a fever.
got it. That's fair.
Yeah.
I mean, that's true.
So we have no idea how sick this patient really is.
So it was at 21.3% in June, and then July they're just like, nah, let's just stop. Okay.
Yeah, we're going to stop giving you numbers. They talked about how they will not be giving this age-specific urban unemployment rate because, the number of youth in inner cities has grown. Therefore, it's become a less useful measure. There was one private report by a professor that put out a number that said it actually may be as high as 46%. All right, which is
And he disappeared.
Well, the article got retracted.
And he's gone. Guaranteed.
Yeah, I can't speak to that, but I did see an article talking about how that article had been withdrawn after this. So
yeah, he got in a car accident immediately after that video. Yeah.
That's so weird. He locked himself in his trunk of the car too before the accident. I don't know how that happened.
Wild.
Yeah. And the other major like news driver this week, China, Evergrande. We talked about this a couple of years ago. Do you
Yeah,
remember this at all?
this is
Yeah.
old. Yeah.
So yeah, but it's circled back. It's
Yep.
become relevant again. Anytime people start to have a little bit of fear in the economic kind of circle, they look for anything out there that could be wrong. It's like that chicken little sky is falling kind of mentality. But yeah, this is another headwind that's certainly an issue, and they have some serious structural issues with real estate in China. I'm going to show you a little graph here in a second. But Evergrande filed for bankruptcy in the U.S. finally this week. This was a kind of interesting or startling fact here that it was the world's most indebted property developer, the number one debt issuer in the world as far as like a property developer. It's pretty
Right.
crazy to think about that.
Well, don't there? I'm gonna misspeak. This is the problem with doing these live. Isn't there like a rule in China where you have to only buy property in like you have to have a certain amount reinvested in China because they have like cities of buildings that are empty.
So yes, I know what you're talking about. I can't speak to that as it relates to this kind of like Evergrande issue. Housing in general is very much tied to kind of personal wealth, household wealth in China. That's the chart I was actually going to show you.
Oh,
It's just to show you how wrapped up China is in actual household, kind of wealth here. So I actually made this. Oh God damn it, that little white box screwed me over. But this is percent of household wealth in real estate. Right. Comparing, so China, 70% overall, Beijing, 80%, compared to the US, which is like 29.5%. So they have so much more of their wealth concentrated in real estate. That's what you're talking about, where people
okay.
leverage up and buy more and more properties. It's seen as like their number one investment vehicle in China. They don't invest in equities nearly as much as we do. I think it was the article I was reading was almost 70% of US household wealth is between retirement accounts and real estate, and then real estate's about 29.5. So 40% of our wealth is in retirement accounts as like a U.S. household, which as a lot of that is invested in stock market, which is why we have such a thriving stock market here. Whereas in China, it was really driven by real estate, why it's so important to the Chinese economy. So a little blip in real estate when you have a major property developer that basically was running this pyramid scheme start to collapse, or it does collapse when it files bankruptcy. It can have a major, cripple waves on the rest of the economy, which is what people are worried about, and that is a legit worry. I have no idea how you unwind this crap. It seems insane, but is that a Baba problem per se?
I mean, Baba had a ridiculously great quarter. So I get it. It's not good for the economy for China, but I just don't understand how this impacts Baba. Other than the economy going down and people have less money to spend, that would be the obvious thing. But
Yeah, but like people can't put a number on that. You can't. Tell me how much modeling would be involved to say like, all right, this property developer goes down, it creates these ripples in the real
it's
estate
impossible.
sector, which is really important in China. How much does that knock off of Alibaba's revenue growth for the next few years?
It's impossible.
Like,
There's too many
yeah,
variables and estimations. It just gets impossible.
yeah. Now let me complicate that by saying that there's a butterfly off the coast of Japan that's flapping its wings at 30 hertz per second. Exactly, right? It's ridiculous. That is literally what they're trying to do. I get that it is a problem, and when you have uncertainty, you discount stuff. But you're still talking about a company that, as of my last calculation, was going at about a 12% free cash flow yield if you annualize that what they returned. Now you even have taken another 10% off that stock price, so that's like another 2%. So Baba right now would be around a 13% or so free cash flow yield, annualizing the previous quarter. Never mind the trailing 12 months. Like, those are ridiculous numbers.
I'm going to ask you the question that everyone wants to know at the end of this.
All right, fair enough. And this just kind of highlights the point about how expensive housing, particularly in China, is. This is the house price to income ratio, and China's actually not on this chart here. The United States 135%, somewhere in that ballpark. This is overall average. So meaning give you an idea of how expensive property is in that country compared to the rest of the world. Whereas when you're looking at something like Beijing, up to 25 times it was the ratio here. And then if you look at this chart here, this is cities in the world by home price to income ratio. And if you look at this, 6 out of the top 10 are in China, to tell you how expensive it is to live in a major city in China. Yeah, Shanghai here, 50 to 1.
So 50 to 1 for income? So 50x
Yeah.
your income to buy a house?
Yeah. Mm-hmm.
So you just can't buy a house? Okay.
Yeah, they're completely unaffordable, like insanely unaffordable. That tells you that there's a serious question as to the stability of these prices. Right, it's hard to maintain prices that are that outside of like the norm and that extreme for long periods of time. So yeah, I get it. There's definitely a headwind there, and something shoe could drop, the music could stop, and we could see some serious unwinding in real estate asset prices in China. But how significant that impact would be on Alibaba is still really hard to determine. Because they're diversified across multiple different product lines. They have things that are necessities, like their grocery kind of business, which in this most recent quarter took a little step back, but there also sells like things that are a little bit more, wants in the electronic category. That was one of their better growth sectors in terms of their actual Taobao and Tmall was electronics. But it's hard to know.
So, okay. They dropped down. They're at 101. They're at like 87 now ish.
Yeah, 88, I think. Yeah.
Is this an entry to buy more, Vinny? Or is this I'm going to sit on my hands and wait? Because you're making it sound like this is a good discount.
I mean, it is a sexy number, right? Because you're looking, like I said, about 13, 14% from a free cash flow yield perspective. That is 1/5 the price of Apple, if that gives you perspective. You're talking about almost 1/3 the price of Google. And yes, those companies deserve to be priced at a higher valuation than Alibaba does. But for that kind of discount, I'm willing to take a little bit more risk on. This to me has always been I plan to hold this stock for 10 plus years.
2030.
So
Yeah.
I built up my position. I don't really want to buy or sell more. I'm still selling covered calls against it to generate a little bit of income and capitalize on periods where it's down like this. But the longer it's down in this time period, that's more time that Alibaba can use that free cash flow to buy back shares. And I ultimately think it'll be benefit us in the long run. So I'm okay with seeing this continue to stay depressed for quite a while.
Is there a price that it'll hit for you to add more shares?
Ooh, that's a good question. Off the top of my head, 50 is like a nice round number that if I saw 50 again, I don't think I could say no. It'd be hard to pass it up at that point. That I would have to do the math on the free cash flow yield at that point, but you're talking about probably a 30+% free cash flow yield, which is insane.
Okay. All right, guys. Let us know what you think. This is interesting. All right.
Yeah. Catch you next one.